Good morning, good morning, good morning, good morning, everybody. Super excited to have you here. It is 2023, and we are here to talk housing market strategies. What are our thoughts already? Guys, we're already behind. It's 11 and a half hours in, and I haven't heard about a deal yet. So, guys, it's going to be a fantastic year in 2023 for many of us that are prepared, ready, having done the work. But let's talk about it. I think that there's a lot that's going to change in this market. I think that the Fed is not going to pivot. I think that they're going to continue to raise rates. I think that you'll see compression between the Fed funds rate and what banks are lending money out, because at the end of the day, they get paid to lend money out, i.e. their profits. So it's going to be an interesting year for sure, to say the very least. But if you spent time getting ready, and getting ready entails a lot of things. It entails, having gotten your money right, having put yourself in a position to put away as much money as possible. Second thing is skilling up, making sure that you're doing the work on a daily basis, trying to understand your market. The thing that a lot of the national real estate guys break is the fact that everything is super hyper local. And so while a video about, Phoenix might get 300,000 views, it doesn't mean the rest is coming. That's all going to happen in those markets. If you really want to get an understanding and a taste for things, what you can do is you can look at how much each individual market shifted in 2008 to 2011. If you look at a lot of those markets, some of them were down single digits. Some of them were down double digits, 12 to 15, 18%. Some were down in the 20s, some were in the 30s, some were in the 40s, and I can keep all going all the way to 70s. Some markets, like Mike Zuber's Fresno, fell 75%. Every market was not like that. In this coming correction, every market's not going to be like that. And so while it's nice to watch a lot of the channels that talk about these national things, largely speaking, it doesn't matter. It doesn't matter because we're not national buyers. We are localized buyers. We buy in our market based on what's going on in our market. As an example, if you see 3 of the 5 major employers pull out of that market's going to struggle. If it has 80% of its workers coming from one company and that company starts doing layoffs, that market's going to struggle. That said, that doesn't mean that the real estate market's due for a crash. It doesn't mean that. There are over 400 markets in the US that get tracked. And in those 400 plus markets, most of them have still not seen down numbers. Most of them have not. Most of them have seen light inventory. Most of them have seen numbers not coming down. Most of them have seen tight supply, and most of them have seen not lowered rents. So while there are certainly the outliers, and what I love is when people forget that I've called a 10 to 20% correction, I do believe it will happen, but we've only just begun. And so this year, 2023, next year, 2024, there's going to be a lot of things that shake out. Will unemployment hit 5%? Will it hit 7? Will it hit 10? Who knows? Will rates hit 6, 8, 10? No one exactly knows. Here's what I can tell you. The best way that I know how to run the best business that I can is while a market is still falling, if I'm investing in a market that's still falling and we're seeing lower and lower lows, then certainly I'm on the sidelines from an investment perspective. But if the returns are there, right, and I'm looking at something giving me a return of 22, 28, 34%, I'm not really sure I care how much lower the price goes. If it goes down another $100,000, I don't think I care. You might be different. Everyone as an investor gets to make their own rules. Everyone as an investor gets to understand how they want to do and how they want to perform in their market. But because I'm buying something that's buy and hold, because I'm buying something that really is all about the cash flow, I don't really care much about appreciation. When I was buying stuff in 09 and 10 and 11, everyone was still saying then, hey, it's just going to go lower. It's just going to go lower. We had properties that were lower than what we paid for them. And even crazier, we then took money and put it into them to make them nice units. Now, I can tell you the best performing properties I have in my entire portfolio. Yeah, you guessed it. I bought them then. It's because when everybody was scared and everybody was watching the news, air quotation marks, and everybody was watching people talking about the crash, the crash, the crash. I've talked about a new concept of something called the velocity of information. The velocity of information is very different than it was before. The velocity of information now in 2022 is nothing like it was in 2008. In 2008, many of us still trusted news outlets. Many of us still watched a lot of those news outlets. But I can tell you that there wasn't a whole lot else going on in the market from a perspective of finding your data other than the core places. It was a newer, not new, but a newer phenomenon. Now we all get them other places. Very few of us, based on the ratings, watch these major news outlets. So that being said, we're looking for the next guy that knows the next thing, that has statistics to figure out exactly, and algorithms to figure out what's going to happen next. When it's all said and done, if there were 100 people, there are probably 1 or 2 that will get it right. There are probably another 4 or 5 that will be close. But then you're going to have 94 or 95% of them be wrong. And at the end of the day, I can promise you this: they're not watching your specific market. And so while I'm concerned about what might happen in the 2023 market, I'm not overly concerned. The reason why is because the prices in Las Vegas only affect me if I'm buying in Las Vegas. The prices in Fresno or any of these other, any of the other guys that I work with, whether it's Dion or Mike, any of these other markets, it only concerns me based on I have friends that are investing in those markets. So I would encourage you that in this year, 2023, do your best to block out noise. You know far more about your market and what's happening in your market than anybody with any channel, unless they're doing a channel in your market. So I would encourage you guys, be the expert in your market. Skill up on what you need to do to put yourself in position to make sure that when you find a deal, you can execute, and that you don't get stuck like I did when I started investing over 20 years ago. I was at the closing table and I was thrilled that I'd finally closed on a property. And then I realized I had no idea what I was going to do next. I didn't have a lease. I had no idea how to talk to tenants. I had no idea how to do an eviction. I had no idea how to do any of these things. And so, yeah, it was a little bit scary. And I just came to the realization of I have a lot of skilling up to do. So whether you're a new landlord, newer landlord, or a landlord that's been around for 10 or 15 years, we've put together processes and products in place in our new course that will make sure that you skill up in areas to where you are being the absolute best. There's no doubt in my mind that if you are a average landlord, it will make you good. If you are good, it will make you great. And if you are great, it will make you elite. The key to this is you guys have access to all of this information. We'll have ongoing experts coming through the series, but it's going to be different than ever before. We're going to have people that are actual contractors. We're going to have roofers. We're going to have plumbers. We're going to have electricians. We're going to have people that are the actual tradesmen in the field. So you know the right words to use when having a conversation with these folks, because this is a big concept that I want to talk a lot about in 2023, which is property management insourcing. I think a lot of people are leaving a lot of money on the table just so they can have the comfort of having somebody take that phone call. I think that there's a lot of opportunity for people that are currently outsourcing it, where they could insource it, save themselves massive amounts of money. And the people that are already either owner ox or they are self-managers, I think that those are the folks that can really take it 1 or 2 levels higher to really maximize profits. And that doesn't just mean raises on rents. So, I'm super excited to be doing this with you guys this year. I think it's going to be an absolutely spectacular year. I know in my market, I haven't really seen very many deals. Excuse me, not a whole lot of inventory. Rates aren't particularly good. but I'm still listening to deals. One came across my desk last week, and so we'll kind of wait and see what happens. But yeah, I think that there were a few that came across my desk last week. One of them is more attractive than the others. So I'm excited to have you guys, excited to be doing this with you. I will be a hard stop today at 1 o'clock today, 1 o'clock Eastern time. So another 80 minutes. I'll be a hard stop today because we are jumping on a plane and we are going on vacation. And so I'll still be doing some stuff in the field. I'm actually getting together with a bunch of the guys throughout the course of the next couple of weeks and hanging out, and we'll definitely shoot some footage and spend some time together. But yeah, I'm excited for it. I've never, ever in my entire life had 13 days where I wasn't home. So, I don't know. I guess we'll see. It's going to be an adventure. We're flying tonight with 3 kids, 5 and under. And so holy Toledo, who signed us up for that? But yeah, we will wait and see how that happens. So without further ado, let's jump in. We'll answer some questions. Robert Farinelli, Happy New Year. Thank you very much for the super chat, Robert. Appreciate that. By the way, Matt, you have a great Christmas light game going on. Just happened to drive by our house on the way to a New Year's party at the Rollinsford Mills. Oh, very cool. Very cool. Let's see. All-nighter hider, bonjour, and welcome to a new year of kicking ass. I love that. And it is that. Guys, there's going to be a lot of fear. You're going to not be able to get away from it. It's going to be everywhere. I'm telling you, do the fundamentals. There's a reason why Warren Buffett is worth billions and billions and billions of dollars. People pay $500,000 to $1 million for a lunch with this man. And the number one piece of advice he gives you is, if you've done the work and you understand the market, then be greedy when others are fearful. So, you know what? I respect Warren immensely. And so how could you not? How could you not? And has he made some missteps in his career? Sure. But you know what? We're in this for the long term. Anytime I'm looking at a house, I'm not looking at a 5-year time horizon. I'm looking at a 20 or 30-year time horizon. That's how I judge things. And you can often find that the people that are the most wealthy are the ones that judge their time horizons in the longest periods of time. Not 6 months, not 12 months, not next week or next month, not next year. They're the ones who said, right, but where am I going to be in 10 or 20 years? They're the ones who actually hit it out of the park and completely crushed it. So happy New Year to you and your family. Invest to Wealth. Thank you very much to you as well. T, good morning from Indy. Good morning. Kevin Chen, good morning, Matt. Happy New Year. I signed up for the course, ready to level up. I love it. Guys, in that course, it is going to be a huge help to you. I do like the boot camp. I did discount the boot camp because I honestly believe that the relationships that you'll create in that boot camp, the conversations that we'll be able to have an hour a week at following up the course. So you'll do the course module and then we'll spend an hour on a Zoom call talking through everything, or a Zoom-like call. It's going to be in the new platform. But I believe that hour will be great minds, iron sharpening iron, and people picking up even more skills and making connections, right? Because we've taught that this is a relationship business. So while the course stands on its own and it's going to be super powerful and it's there so you can watch it 100 times over, the key to this is also, if you can, create community, doing the boot camp, and better understanding other investors' strategies. Some of the best ideas that I've had are not mine. They've actually been ideas where it's like, wow, that's actually a better idea. I can do things better that way. So that's why I wanted to make sure that we did the boot camp. All-nighter hider, over 3,000 counties and 9,000 cities, I believe. So that's a lot of markets. It really is. Jeff M, Happy New Year. Happy New Year, Jeff. You're going to get one this year, Jeff. I know you are. Hider, you too. I know you are too. Jeff's here. We can start now. That's right. I love talking to you on the channel throughout the week. You're a good dude. Yeah, he is. Good guys. And that's what we love about this the most. We love the community that we have. Let's see. We're going to kill it this year. I agree. Thanks, Robert. Yes. My chat moved. Let's see. Honestly, like for the channel and listening. Thank you, honestly. Jeff M. Yeah, that's what I need to learn this year is the whole rehab process. The turnkey prices in my market is your entire retirement along with your left kidney. It's true story. So that was the purpose for the course, guys, is that there's turnkey. You have a ton more competition. Do you know what? So I have a famous saying, and it's gross, but it is what it is. It's still famous. And all of my brokers laugh at me. When I walk in a house and I smell cat pee, I call it the smell of money. Do you know why? Because 99% of people that walk that unit want nothing to do with it anymore. They're just like, cat pee. Now we have a way of getting rid of it. It costs thousands and thousands of dollars, but we have a way of getting rid of it. And so I buy the properties that a lot of others just go, oh no. Turnkey, quite frankly, you can make money on it, but there's a reason why my returns are in the 20s percent. You know, they're over 20. There's a reason why my returns are there and most others are single digits or low double digit. It's because they're buying a property and they already have a renter in place. If you can do things, and that's what we teach in the course, here are 5 things that you can do on budget to drastically up the value, the perceived value of your unit. Here's how to evaluate based on your going through your unit and what things you need to do. On the construction side, you can buy something with delayed maintenance that isn't going to fly off the market, but I can show you how what we've done actually then creates that value. But that's a learning process. That's not going to be, hey, I've taken 8 or 9 hours of watching the lumberjack and now I'm ready to go. You're going to be in it. You're going to be on it. You're going to be taking notes. You're going to be hearing the different experts speak on the different things, on the different contractor pieces, how to have that conversation with the contractor, how to make sure you're standardized on the way that you're getting your pricing. So you get a good price, you get a good contractor, and you don't get got. I've been got. I got one time for $17,000 and I got another time for $3,000 and I got another time for like $7,000. I can teach you all the telltale signs of what you're going to see in those processes. That's what we're going to talk about. So Jeff, to your point, that's exactly right. Turnkey is sexy and a lot of people wanted to get into the game. And it's easy because they don't have to do any work. Property management's already in place. Tenants already in place. We're going to get tenants in place. Guys, that's easy. That's much easier than what I'm talking about. However, for me and for you, likely speaking, the returns are going to be there far better. Sean and Wendy, God is amazing. Happy New Year. Thanks for all you do. Thank you so much, Sean and Wendy. Happy to have you here. Santi, what's up? Santi, good to have you. Good to see you back. I know you've been busy. Brett Beesballer, Happy New Year. Happy New Year, Brett. Made of rubber. Everything is going to crash. Ha ha. You got used to having all that money, huh? Yeah. I get why your name's made of rubber. I mean, at the end of the day, you can do whatever you need to. I'm not begging you to invest in real estate. Don't do it. But I bet you're a renter. So, Sean and Wendy, that's right. They're here. Ninja Vanish, good morning. Let's see. Made of rubber. From the last 15 years, 30K went to 180K, 445K is now back to 30K. It just isn't, but I'd love to see your math. Communism made money. Sure it did. And people were really joyful too. Santi 33143, Matt, should buy a house today overpriced if I'm going to live in it for 10 years? I don't think that you buy it overpriced. I think, you know, when it comes to obviously evaluation of assets, when it comes to them actually being an asset and being an investment property, I think looking at an investment property, it's different. I think when you're looking at your own personal residence, the way I balanced it when I bought my house, because I bought my house in 2020, the way that I looked at it when I bought my house was, what is the cost if I don't buy the house? You know, so am I stable in my job? Is my family going to be here in this local area? You know, what's my cost of rent to stay here if I don't buy something? You know, what's the debt? At the time I could get debt at, you know, a little over 3. It made sense for me. So I think that's individualistic. I think the other piece that's individualistic is depending on how much money you have too. And so I don't know. And again, it's different from market too. So overpriced, it depends, right? But I always look at when I'm looking at a deal from a rental perspective, cheap, expensive, I'm looking for return on my capital. So if my return on my capital is in the 20s, like it should be, based on the types of deals that I do, then for me, that's a win. And so then, but to me, then that's not an expensive deal, even if others perceive it as expensive. So I talk a lot about the fact that there's a couple of guys that are investors around here that I beat them consistently. The reason I beat them consistently is because their rents are way too low. Their rents aren't anywhere near what the actual market is. And so then they're like, well, yeah, we have almost all of our tenants renew. Yeah, I bet you do. I bet you do. When was the last time you did a rent raise? Well, we haven't had to do a rent raise in 3 years. Every year, their margin's getting compressed. They don't know how to, they're not good operators. They don't know how to run a business. So likely they're going to be in the position where 3 to 5 years from now, I'll be buying their stuff. Robert Farinelli, question. So yesterday I got an email from Southern New Hampshire Services to fill out a tenant documentation form. I thought rental assistance was gone. How should I handle this? I don't know. I would call them and find out what it's for. Rental assistance is gone. The only ones that it was extended to were the people that they put in hotels. But it might be something for heating assistance under the same program. So I would just reach out to them and ask them what it was. All-nighter, smack that like button. I appreciate that. I get if I get the form, does that mean I will get paid, or is it still a chance they will I will run out of money? Tenant has been paying weekly and wants temporarily stop because of this. Yeah, they don't stop until, and you can tell them nothing stops until you get approved, period, end of story. But I would call and find out what exactly the form is. Like I said, you might have automatically gotten one of those letters that you don't even qualify for. That program is run that poorly. J. Corey Alexander, love to hear your opinion on short-term rental versus long-term, pros and cons. Thanks for all the help and information. So J. Corey, I really appreciate you asking. I'm not an STR guy, so I don't have any STRs, just in the interest of full disclosure. Me particularly, I don't like the model. I think STR is more of a job. And I think LTR is more of being able to be a business operator. So me particularly, the way that I like to be built, the way my company's built, I like to really focus on LTR stuff. The STR market, I think in pockets will do fine. I think in other pockets, it will do horribly. I think there's certain areas where there's a wicked ton of oversupply. And I think that, but I would watch the video that I did on Airbnb crashing the market, because there's a lot of belief that that can happen. And when you look at the math doesn't say it's possible. Math, logic, reality, not feelings. So I would take a look at that video, because I go in depth with Dion and with Mike. We go in depth with all the numbers, and I think it will surprise you. Matt Bittner, have you had any insulting offers accepted? If so, what were the numbers? Insulting offers accepted. Trying to think of the last few transactions we did. I wouldn't say they were insulting offers. What was the last? No, all of our stuff has been pretty close to where it should be priced. And well, one of them we paid, two of them we paid over asking, because the agent already did the job. They beat the tar out of a seller. They were not a good fiduciary there. They did not serve their client well. All the numbers pointed to how that asset was worth a whole lot more money, and they just didn't do it. They were just like, yeah, let's get it low, and then let's get a bunch of offers. And so they got like 17 offers. We weren't the highest. I think we were number 3 or number 4, and we got it because of how we present our offers. By the way, in the course, But we talk about how we present our offers, and we win even when we're not the highest price, because it's not always about price. That's the mistake that a lot of newer investors make. And a lot of, frankly, I see that mistake made by even seasoned investors. So nothing that's been crazy. Let's see. Jamie Schmitz. Hey, Jamie, Happy New Year. Peter Navarro III, what's up? Happy New Year's. Happy New Year's to you as well. Jeff M. Matt, good question. Which was a good question, Jeff? Hen Wen, Robert Farinelli with management company also. Okay, cool. Yeah, I would follow up on those letters, guys, because, yeah, I mean, the state put out, in our state, it's different in every state, but the state put out something saying that the funds were extended, but only for tenants that were in a hotel, and that was only until March, because they wanted to get through winter. So I am not aware, as of Friday, I'm not aware of any program where that's been extended. Nothing that I've seen. Ready on. How do you deal with getting permits for work you need to do on the house? Do you leave that to the contractors? I don't. And that's actually another thing too. If you look at the, thanks Hyder for putting that in there. You guys take a look at the syllabus right there. There's nothing to buy there. It's just, this is what the syllabus is. One of the things that we teach is how to interact with the code enforcement officials. The thing that you want to make sure is, I want a relationship with the code enforcement officials, right? I don't want a code enforcement official passing something in one of my units that's being done by one of the contractors because the contractor has a great relationship with them. I want to form that relationship with them that way, with the code enforcement folks. So when they cite something and say, hey, here's the issue, in my state, they actually have to cite the code of why it's a violation and why it's not done to code. I want to be, and this is a big part about insourcing property management. You need to be able to depend on the people doing their jobs to make sure that you're being done, all your work is being done in accordance with law. Or if they say, I understand that that's not possible. So the big thing is stairs in my area. Stairs can vary in riser height, and they can also vary in width, i.e. the front stair to the front of the stair to the back of the stair. That can vary. When that does in fact vary, if you touch the stairs, i.e. if you start to make repairs, then you have to bring them up to code. Many of these older homes, stairs don't meet the current codes. So it's one of those things where you get to have that conversation with the inspector and say, listen, I'm not going to touch the stairs. And he says, well, if you don't touch them, then they're grandfathered in. If you do touch them, they are. But it's taking people through all of those processes and having that conversation with them so they recognize that you're a conscientious landlord and that you'll fix things when they come up and that you're trying to do it the right way. That earns you a ton of style points, but there's all of that stuff that we kind of go through and having those conversations that I know are going to make you a better landlord. Santi, house at 785, getting at 685. If I buy it cash for rent, I can put 30K for impact window or other stuff. Rent average 42 to 46, yield 4.5. Yield in Miami is very poor. Yeah, that's the biggest challenge, is that I think Miami is probably one of the hotter, but overdone markets, but I haven't done a ton of work there. And so how I would look at that is I would look at that and then compare. To me, a 4.5% deal in 2023 is too skinny for me, because I look at I look at a 4.5% deal and say, it's not take a whole lot to knock that number out, especially in a heavy fluctuating market like Phoenix. I wouldn't buy me personally, I wouldn't buy anything in Phoenix, because the market is so unbelievably hot. Was so unbelievable hot. And now it's really coming down on the backside of it. I would really have to heavily evaluate each one of those deals in and of themselves after I know the market to say, I'm willing to let this thing go down another $100,000 in value because of this reason. It's going to still give me great returns. So that's the kind of stuff that I would look at. Sound Snags, Happy New Year. Happy New Year to you. Matt Bidner, glad that was a help. Hey, where can I find your courses and boot camp? Kane, you can see it in the link there, right there, that Hyder has. And again, that's the entire syllabus, everything that's going to be in there. The thing that I didn't put in the syllabus, which I probably should have, which was as part of that course, we're having tradesmen come in probably every 4 to 8 weeks, where they'll actually have a conversation and answer people's questions. That way, if you're getting ready to do X, Y, or Z project, you can do it. It's also going to be recorded and left in the course. Cash flow. Hey, cash flow. What's up, my man? Happy New Year to you. Jeff M, economic question. Are you and your team looking at how changing demographics, i.e. millennials coming to age, boomers dying, how it will affect housing over the next 15 years? So that's an Ivy Zellman thing. They called it the silver tsunami. I think that if you look at, I think one of the major answers that comes into play there is that people are living longer and longer. People want to stay in their homes longer and longer. And so now nursing care coming to the home is a very, very big thing. I also think that if you look at for each of the previous 6 decades, that we built about 20 million units. And in 2010 to 2020, we built 6.5-ish. So we're 14 million off. And so the biggest issue now is going to be supply. The question is, can you wait 15 years for that supply to start coming? And again, I think that you get appreciation over the next 15 years. Who knows what that's going to be? Is it going to be 3% on Annum, 7%, 15, who knows? No one knows. And so I think the biggest issue is, I feel pretty comfortable that the US will continue to want to take people in from other countries. I feel pretty comfortable that the US population is going to continue to grow. And I feel pretty comfortable that there's no silver tsunami coming. In a lot of cases, if those folks have kids, they're probably going to get that house to those kids, and those kids might not want to live there. So they might sell it, but they might also turn it into a rental. So I think that while it's an awesome question, I think there's so many facets to it that you can't just look at a chart and know what the answer is going to be, right? If that were the case, Japan real estate would be worthless because they lose, I'm pretty sure it's Japan. They lose population like it's going out of style. Yes, treads and risers make up stairs. Treads, risers. So the riser is the part that goes up to the stair. Yes. I know you know that. Corby Carter, good morning. Good morning, Corby. Do you think a 10% COC is good for a newbie? I'm thinking at least that. So T, I think that's a great question. I think instead of coming up with the number of what you think might be a good number, I would do the reverse. I would look at the market and tell me what the market's going to give me as a return. So I might think that I don't want to get into a deal unless I'm going to make at least 12 points, right? But the biggest key for me is does my market even create 12, opportunities at 12%? Admittedly, the reason that my properties have massive returns, I do value add. I will do construction. I will do rehab. I will do updates. I will do all of that sort of stuff. The other piece too is that I know what my market is rent wise from the rent box. The rent box drives it for me. If I look at rent box and I say, all right, everyone else is saying this thing is overpriced because they priced it at 500 and they're only getting 2,200 aside for this duplex. Yeah, their numbers suck. I'm getting 3,000 for that same unit. That's the key, is pricing those units, understanding what your market is. That's one of the things that we teach in the course is the student housing. Student housing, they love to get off campus because of the pricing and they want more freedom. I give them a solution for student housing. And that's the reason that we got really, really rich off of student housing. And it was still giving the students a deal. So we kind of walk through all of that stuff as well, which is, again, completely different approach than most take. Ready on. I was asking for stairs as well. Yep. Want to move interior staircase to the exterior to win some square footage. Okay. And make the stairs safer because they're steep now. Yeah. So ready on, what you're probably looking at will cost you about $30,000 in all likelihood. That's a really expensive upgrade. We've done it once because it had to be done. But it's a really ambitious project, really super ambitious. So you can eliminate them from the inside. You can pick up some square footage. But I believe you're in New Hampshire. And so if you are, now you introduce the potential for slip and fall down the stairs. Because those stairs being outside 3 months a year, they're going to be covered with snow or ice. So maybe, you want to give the tenant that ownership, but now they're going to be starting to think, oh, carrying my stuff up these stairs all the time, et cetera, et cetera, et cetera. Just something to consider. Doesn't mean that it's a wrong decision, but if you price everything out, you're probably looking at a $30,000 adjustment, is my guess. If you're looking at outside stairs to the upside and then doing that in PT and 14 feet and all that stuff, I don't know the exact situation, but I'd be guessing probably around 30 is where you're going to be, and what that's going to cost you. All in. Jason Maggard. Hey, Jason. Muddy Modern Method. Good to have you here. Let's presume inflation pressures, mostly from wage side, gives us 7 to 9% loan rates for the next few years. How do you see the overall market reacting? So I see it being slow. I see transactions remaining low. I see it affecting housing prices, absolutely. But I see it being a correction more than a crash. What I've called for is a 10% to 20% reduction in the cost of a median home in the country. Now, so for you to get to 10 to 20%, it means some market's going to fall 20, 30, 40%. The cumulative effect of 08 to 2012 was just under 30%. Keep that in mind. So some markets did fall 75, but some markets barely fell at all. My market didn't really move a whole lot because we didn't have this big, huge boom. And so we went down, for, I think in that range, 10 to 20%. The biggest issue was inventory. And so I think that we are going to have rates, 6s and 7s and 8s. And I think that it's going to fluctuate throughout that. And then the banks work on margin. And for every dollar they get as a depositor, they get to lend that money out, depending on the bank, between 8 and 10 times. If they can lend that money out at 8 to 10 times, but there's no takers, well, what do? They lower the margin by which they make on that money. So instead of making 2% margin on the money, they make 1.5. So there's so many bells and whistles, there's so many levers and knobs in the situation that's why I think, largely speaking, people that time the market lose. If you time the market and you won, you largely got lucky. And so for me as an investor, I'll buy a deal at 9% down. I've seen investors buy deals at 18%. 18% is what they were getting charged on the money. But it's because the person wanted this massive income and they were willing to underwrite the number at a lot lower a price. So at the end of the day, it really comes down to payment. So I think it's going to affect the market. I think there's going to be a lot fewer transactions for the next 2 years. I think we don't touch anywhere near the 7 million that we were touching. I think we're going to be I think this year we'll probably be in the 3s, low 4s. I think that 2025 is going to be much the same. I think the new home builders are much more prepared than they ever were in the past. They're not going to keep on just building, and if you build it, they will come. They've sold to a lot of firms, large firms that have bought product. And Wall Street, there's just announcement on a fund that opened up last week that's $110 billion to buy real estate, single family homes. If you look at that, 110 billion buys you 244,000 or 247,000 homes at the median home price, which means they can buy in higher markets that might be higher and lower markets that might be lower. And so that comes down to an average of, 247,000 homes. But yeah, I think that there's going to be a lot of effects, but I think that people trying to guess what it's going to do. I think that if you're a home owner already, then, you've probably got a 3% mortgage and you're not going to move. That's going to be the lion's share. The lion's share is going to be the market of people that are not going to move. They're going to be in their houses because it's going to be less expensive to add on than it is going to be to sell and get a new 7% rate. Or they'll take that existing asset because they can rent it out and they'll rent it out. So I think I see a lot more units becoming rented or people staying there than actually transacting in the marketplace. That's a great question. Let's see. Mark Galvin, Happy New Year. Happy New Year, Mark. Brock Boudreau, good morning, Matt. Good afternoon. Dion Talk. Hey, buddy. How you doing? Thanks for the super chat. Have a full year of awesome. We're going to have a full year of awesome together, Dion. Dion is in the house. Oops, chat moved. Sorry. Okay, here we go. Dave Melick, in regards to the LED pancake lights you recommend, do you have any tips for installing and wiring between the lights? We are hoping we don't have to rip out a bunch of drywall in our situation. You shouldn't. The way that I've had my electricians do it is they basically use that as a junction box, the one that's in the middle of the room. And then they'll essentially kill the power to the wires. They'll take the junction box down, and then they'll actually screw through. There's special bits that they use. They might open up that hole a little bit bigger, but then there's special bits that they use that they will get them into the other bay, and then they will do a line, where they can then fish that line down, because then you'll still have to, drill the hole. So they'll basically drill the holes of where the pancakes are going to go. Then they'll actually take the wire. They'll use that in the junction box. They'll take off that junction because it's not high wattage. It's 12 watts. And then they'll just be able to get it to that hole there. And then what they'll actually do is they'll put their hand up there. They'll staple that till it's anchored to the joist. And then you have the line come off, which actually then fits into the junction box for the light. So that's typically what they've done. It's not been this major surgery on sheetrock, if you will. It's my guys done it a bunch of times. And again, they just drill across, run the line and then come right off of it. It's been pretty good. I don't know, maybe because she is handicapped and she qualifies for the program. Potentially. Yeah. Stop guessing. Just call, because she might have it might be something unique to her. It's impossible to say. When's the Lumberjack book coming out? So I've written a lot of the book, but that's like last on the list, in all honesty. Last on the list only because I know the book is kind of the story of why, kind of why I got to where I got to. And the course is really much more the how. Here's how I built the company from 0 to 100 plus units. And all the things that I do on a daily basis to manage the company as an operator. My Serenity. Hi, My Serenity. My tenant moved out of state 6 months in the 1-year lease. Any suggestions for me? So what we always talk about is having an attorney. And so I would talk to the attorney, depending on the state, because they're under lease, the rules vary state to state. In my state, I can actually still charge them rent and accrue the rent. However, when I go to a judge, I have to be able to show them that I continued to market the property at the same price, number one. Number two is that I did follow all the means possible to try and get the unit rented out, And then the third thing is, if I'm still unsuccessful at that point, I have a certain level of mitigation of damages. The longest I've ever seen a judge allow for was on a residential property was 3 months. And then even if you get that judgment, you still have to then go sue to collect it. Now you have the judgment, which is good, but you can then take that judgment, you can give it to a collection agency, or you can take that judgment and try and go then take the next step, which is, in my state, small claims court. I get that judgment against them and they lose. And then I have the option of then saying, okay, here we have to work out a payment plan. And that payment plan might be $20 a week or $25 a week until it's paid off at this interest rate. And then if they miss that, then you can actually go and get non-compliance. You can file a non-compliance, again, in my state. And then they get a bench warrant. So I always talk about having an attorney who's a landlord, because they deal with the same stuff that you deal, and they know the angle by which you're coming from. They're not trying to talk about, higher case law and this and that. No. What have you done? What have you done? What have you done in court? What have you seen in court? What happened in court? How did the gotcha get got? Yeah. So that's why I always have those guys. So hopefully it helps you, My Serenity. I would be having that conversation with the attorney to figure out the strategy. The most important thing is try to mitigate your loss. Instantly throw the thing online, instantly be trying to remarket it, because they want to see that you're operating in good faith, not that you're just kind of leaning back going, yeah, just waiting for them to pay me. Matt Bittner, if I manage to convince a homeowner to sell their home to you on terms, what's the next step? Do I get a lawyer involved to protect me somehow? You'll need a closing company to close it. Your best bet is to get an attorney involved. I did my first true all creative finance deal where there was no bank involved. I did that this year. I had to hire an attorney that is also a landlord that could then write me a note that satisfied our state law, that then they would sign, that I would sign. And so there are steps to it. You have to make sure that you have that paperwork in place, because that person is going to give you, they're going to be holding the note for you. They're essentially holding the mortgage, and then you're paying them the mortgage. And so you have to be able to, you have to have a note to work from. Salmon Butt. Hey, Salmon. Question. I'm looking at a home that's on the market for 1.5 million. It's been on the market for 6+ months now. Recent neighborhood comps show homes selling around 1.2 million. What should I offer? Be insulting. Offer them $1 million. Offer them $1 million. You lose nothing. And you can even say, I'm sorry, it's been on the market for 6 months. Now, the question is it, be honest with yourself, right? Does it have more amenities that might make it worth 1.3? Okay. But I think you lose nothing by saying it's $1 million. Say, I can close, and just be strong. I can close in 30 days, like have all those approval letters ready. Don't just be an idiot and be a flyer, right? So when I'm writing an offer like that, I would say, here is deposit proof. Here is a letter from my bank saying that I've been approved for that amount. Here is the time frame that they've given for me to be able to close on this. Those are the things that put the agent in a position where they can sell your position. They can go back to that seller and say, hey guys, we've got a guy here. Okay. He is in position where he can buy this house for $1 million if you're willing to sell for $1 million. And they're going to act all offended. That's ridiculous. It's crazy. They might still think their house is worth $1.6 million, even with comps going for 1.2, but you don't know unless you try. And the key is making sure you're just putting your best foot forward. It's not just writing an offer for 1.6. It's all of the other pieces that go along with it. Devo in Phoenix, Arizona. So if you wanted to buy a new house, rent the old one, you'd wait too. House works for family needs and mortgage and interest rates low. Yeah, I mean, I think that it's always a case by case scenario, right? If I've got $1 million in cash, or if I had $20,000 in cash, that completely changes my outlook on the market and what I'm doing. And so from my perspective, I want to, if there's a reason that I have to move, well, sure. If I don't necessarily have to move, or I'm saying, quote unquote, waiting for the numbers to come down in the market, you can wait for the numbers to come down because you're already in a house with a super low mortgage. It doesn't hurt you to wait. If you're paying rent, probably hurts you to wait. And that's where you just have to do your work in your market every single day to really understand what's going on in the market that you're looking at. If you're looking to move, generally you have an area, you have, how many bedrooms you want, how many bathrooms you want to know that I'm in a much newer house than a much older house. And so there's no stay pat answer. It really depends on the individual circumstances. Joey Garessi, Matt, have you ever done a VA or an FHA loan assumption? If you could talk about it. I've not done either one of those. Yeah, not done either one. So I'm of no help to you in that regard. I've not assumed any loans before. Jay Corey, what is COC? Cash on cash return. Yep. Cups of coffee. Just kidding. It's cash on cash. Yes. Thanks, Brock. Yeah, it can be yield too. Basically it's, I put this much money into the deal, closing costs, down payment, make ready costs, i.e. whatever things need to be fixed based on the inspection report or other things that you might want to change about it for yourself. And then you look and see what the rents minus all expenses is going to be. That's your net profit. Then your net profit versus what you put into the deal. Let's say it was $100,000 and you're going to make, $10,000 that year on rental profit. Then you've made a 10% cash on cash return. Robert Fernelli. So idea, I have the fire code and recessed lighting. Instead of the fire boxes, could I just build my own box with 2 5/8 sheetrock? Have to ask them that, because Manchester is going to be different than almost everywhere else. Because my understanding is you could also put a metal box in there as well. But again, that's what I would be asking. That's what I would be asking, because when I asked that, they said that they would consider it, but I didn't get an answer, and I need to do this like this century. Oops, man, that's fast. T all-nighter Matt, thank you. You're welcome. Dimitri G. Hey, wish you happiness and health, prosperity, and all the best in the new year. Thank you very much. Happy to share the wisdom. It's much more experience than wisdom. I guess that's how you attain wisdom, is through experience and not having to learn the lesson same over and over. Ironwood Workman, good to have you back. I live in the state of West Virginia. West Virginia lost 3.8% of its population in 2021. And this has been the trend for my entire life. Interesting. Yeah, I wonder what your strategy would be if you lived in my state. Yeah, me too. It would probably take me 3 months to put together a perfect strategy. Because in everything, so I work in corporate America, and they do something called a SWOT analysis. Stands for strengths, weaknesses, opportunities, and threats. And so I have the experience of doing this for companies where I get hired, I get brought in, and usually I go in to fix a company. And the first thing that I do is I create a SWOT analysis. Over the next 90 days, I create, what are the strengths of the company? What are the weaknesses of the company? What's the opportunity that we have? And then what's the threat to that opportunity? That's how I basically have been able to build a massive portfolio, is that I looked at the markets, the strength of New Hampshire versus Mass and Maine. That's how I picked my market. Was the SWOT for New Hampshire was far greater, and it was a far better opportunity than Maine and Mass. That said, there's plenty of people making millions of dollars in both of those states. For me, my SWOT analysis said New Hampshire is my better bet. Matt puts the math in Matthew. Thanks. It's true. Ready on 30K. Are you talking about just the stairs or the work to close up the interior stairs? Yeah. Also, isn't the slip and fall liability with the interior stairs as well? It's less because likely in the interior you have a railing, and there's liability there, but at the same time too, like somebody falls down those stairs, it's far more likely their fault. If you're looking at snow, ice, all the weather conditions outside, did you clean it off fast enough? Did you use the right product? With a stair, et cetera, et cetera, et cetera. So that's my take on it. And yeah, 30K, I'm talking about ripping out the existing, redoing any structural thing that needs to get done, closing it up, and building the stairs outside. My guess is 30K. Jeff M, putting your personal bias aside, Jeff, really. Do you think banning large institutions from purchasing single family homes would help? And where would you draw the line of what constitutes an institution? At the end of the day, government is big, heavy, and stupid. Fact. The problem that they'll have is that by the time they legislate something, the smart people in the room, not the government, will have figured out a way around it. So trying to put in legislation like that is not very helpful. The other thing too is that at what point do you think that housing is like an airline? Like, too big to fail. We can't have the airlines fail. We can't have the banks fail. It's impossible to say. So I don't deal a whole lot with, well, what ifs? Because you can analyze forever. You know what? Well, if this, that's what I kind of love about George Gammon and about Uneducated Economists. They say this is what's happening and what would be the next logical step to occur. Because of that, George's scenario could come true. Is it possible? Yeah. Is it probable? No. Possible, but not probable. And so I have to deal in probabilities, because otherwise no businessman would ever move. There is inherent risk to any entrepreneur. Way it goes. I sign up for it 100%. Some businesses go to zero. Way it goes. I almost went bankrupt 3 times back in the early 2000s because I was buying in an area I shouldn't have been buying it. I hadn't done enough research on the area that I was buying in. And so while it was a transitioning neighborhood, and I was like, transitioning neighborhoods are great, they threw upside down, And so it was like, holy cow, I've got an $18,000 nut and I make $7,000 a month. That's going to be a little bit tough to make up the difference. And so because I'm a great operator, I did everything I could to keep the business going, and I kept the business going and it thrived. Now I recognize that I learned from those mistakes. The difference is that I didn't go bankrupt. I stayed strong, and there were external forces, that things that I couldn't have predicted, couldn't understand. No one could have guessed it. It was one-off, but at the end of the day, if you continue to build your business right, you continue to be a great operator. That's, those are the things that may come up, but you know how to mitigate them. There's no easy way to do this. Dung Tai course is out. All Nighter Hydra put a link above that actually shows the syllabus. And then there's links to order the course if you see so fit, if you believe that I can help you become a better landlord. Let's see. Oh, Codon. Hey, Don. Good to have you. We got to connect. Don, I've missed you, Don. I know you're crazy busy building fourplexes. Hit the like button in the new year with new opportunities. I agree. Thank you, Don. Aloha, everyone. Happy New Year. Thank you, Financial Firefighter. Oh, man, that's a big move in the chat. Let's see. I have a 4-foot drill bit for going through joists. Yep. It also acts as a fish tape. Yep. When holes are drilled. Exactly. Yep. That's exactly right. Boomzer. Hi, Boomzer. Thanks for joining us. How do you calculate down payment, cash flow, etc. before you choose to buy? Do you have a formula? Yep. There's a pretty straightforward formula. There's a video on my channel. A lot of folks already know that, but basically longest story short is I think I covered it since. It's basically my down payment, all the closing costs, which I get from the closing company. I can ask them what the closing costs are going to be. And then anything that I need to repair, before I move in or before I move a renter in there. Those 3 items all added up, that sum total. Then I take what my gross rents are minus all of my expenses. And then that delta, that net rent, I then take that number, multiply it by 12, and then put it into that whatever number that was. Let's say it was $100,000 and my net rents are $10,000. That's a 10% cash on cash. That's a quick and dirty of it. Chris Webb, good morning from Central Virginia. Happy to have you, Chris. Happy New Year, all. We closed on our home in Texas on the 30th. Made a great profit to deploy in 2023. I can't wait to build our portfolio in 23. That is such awesome news. Congratulations, Chris. Todd Doherty, what property management software companies would you recommend me exploring for self-managed 1 to 10 units to compare with Hemlane? Look at Hemlane's financial side. It's tough. I know that I've heard people that size be in Stessa. I've heard them be in, there's a few others. So I like those products, but one of the things that I would tell you is that the most painful thing is moving products. Had I known then what I know now, I would have bought the more expensive one. That way I never had to change out. That way I never had to worry about moving all of my data to the other system. Most people don't know about that stuff. And so when you go from getting out of one of the big ones or one of the small ones to one of the big ones, guess what? It is a nightmare of moving all of that historical data. Do you want to be paying for 2? Nope. So I started with that was a mistake that I made, was not starting with a bigger one that I knew could handle my growth and I knew had all the functions and features that I would want. That's how I selected mine. That was the criteria I used. But yeah, I've heard Stessa on the small stuff. Ironwood Workman. I'm thinking about buying and renting farmland. It might be better than renting housing. Might be. Don't know. Haven't done it. Dividend Dave. Hey, Dave. Great Christmas song. We can start now. That's right. Kenor. Happy New Year. Happy New Year to you too, Kenor. Dividend Dave. Yes, Hyder. Can we repeat the last hour? No, we're not repeating the last hour. Dave. Get the ding-a-ling. hit the notification bell. Awesome. Let's see. Matt Bittner, what got you in trouble when you bought into a gentrifying neighborhood? Would you still have bought in that neighborhood looking back? No, not in a million years. Nope. Because it moves so quickly from D to like C, C plus, that everything appeared like it was in much more demand. And it was technically, but the biggest mistake that I made was as soon as the economy went sideways, guess what happened? Everyone stopped paying their rents. Literally, I went from 8 to 3 to 1. Now, the biggest mistake that I made was I purposely because it was easier. People were like, yeah, you know what? My buddy's in construction. He's looking for a place. Yeah, my buddy's in construction. He's looking for a place. And so what I do? Hey, your buddy's in construction looking for a place? Yeah, sure. Take a look. Take a look. Love it. So I had, of my 9 or 8 tenants at the time, all 8 of them or 7 of the 8 were in construction. That wasn't good because when construction blew up, I lost all of my tenant base. So one of the things we actually talk about in the course is diversification, not only of tenant, but also of, vertical, right? That way, if the big company moves away and they're, a big company moves away and they're 20% of the jobs in the area, I didn't have more of my portfolio than 10 or 15%. So I can weather a 10 or 15% storm. I can't weather if I was just like, yeah, sure, it's great. All these people work at the same company. They're all together. If that were 40% of my portfolio, now I could make it, then I couldn't. Dung Tai, thanks, Lumberjack. I have around 66 units with 2 property managers and a couple of these option tenants, but I feel like I am stuck and need to educate myself. So your course would be a good place. Dung Tai, that is an awesome number. 66. Congratulations. Yeah, there's no doubt in my mind that for people of that size, in that course, there are nuggets for folks in that position where it's definitely going to help you. Things like insourcing, things like being able to double check on things. I see that my wife gets a different reaction from some contractors than I do. That bothers me. That really bothers me. And so if you can talk the talk, the conversation shifts. And that's what I want to do. I want people to skill up in being able to talk the talk. Like if I can sit there and I can talk to a roofer and I can go, all right, cool. So let's do a double line of ice and water, and then we'll do felt to the top. Then we'll do a special ridge. Then we'll do the ridge cap, but make sure that we're flashing around, that I want to make sure that you guys are still doing a lead flasher on the chimney. And I want to see a new drip edge on there as well. And then we also need to account for the overhang and how it's going to actually land in the gutter. Now, if you understood everything that I just said, you don't need the construction portion of I'm a lumberjack or I'm a landlord, now what? But if you can have that conversation with a roofer, does the roofer take you more seriously? Then you can have the conversation of, hey, listen, I want to make sure that we're using 30-year product, 30-year arcs. If 40s or 50s are available, let's just at least see what the difference is. And I want to make sure that in this quote, you have the dumpster in there to do your takeaway. And there's in the quote that they are to clean up all grounds and all nails. And that way, if you get a nail in your tire, then it's their fault, not yours. They got to pay you the $150 or $200 for a tire. This is how you skill up. This is how you get great. And this is how you don't get got. Yeah, 66 Dung Tai. That's awesome. Congratulations. Are wholesalers only interested in cash buyers? I'm not sure how that works. Newbie, so financing only. I'm not Oprah yet. I love that T. Not necessarily. There are some, not largely, no. I work with a number of wholesalers that recognize that they're just going to get paid when I close on the property, because they only get paid when I close with some of these, with the wholesalers I work with. So it's they're actually listed out on the HUD as to what their payment is going to be as part of the deal. All-nighter hider, way to be uncomfortable in a comfort zone, Dung Tai. I know, right? Excited to see you go further. I think that's awesome. Robert Fernelli, I don't think we have to convince Matt to invest in Manchester again, which is good because I don't want to play in the same market as him. I appreciate that. Yeah, Manchester is not a market for me. It just isn't. And I know that it's different now. And that's the thing is, when I was investing there almost 20 years ago, it was a different market. And it was a rough market. And I learned a lot of great lessons. But for me, there's a lot of people that are chasing yield there or returns there. And when a downturn happens, it happens there. That is almost always ground zero in this state for a downturn. Those are the ones that really start to hurt you. Chris Webb, thanks all. You are all part of my journey and I appreciate your input. I generally rewatch these videos at work and you guys ask great questions and Matt gives thought out answers. Thanks, Chris. I appreciate that. Yeah, congrats again. Dung Tai, thanks, Lumberjack. That's all knowledge right there. It's a lot of work to acquire them. Yep. And yes, I did a lot of seller financing. I love that. Congratulations. And Burr with hard money lenders. I started out as a wholesaler. See, guys, Dung Tai is the man. I'm so happy you joined the channel. I'm so happy you came to hang out. All those things he talked about, that's hard. That's hard. Doing hard money deals, those are scary. Those guys are professionals at writing those contracts. They can KO you real fast. Seller financing deals, they're great, but intricate. They can be really simple. They can also be really hairy and difficult. It means they trust you. And Burr is a strategy largely right now, won't work for novices. For some experts, it still will, but there's a lot there. Yeah, congratulations, Dung Tai. Really glad you came today. All night had a question. Have you used TPO roofing out there? I imagine it would do great with snow. So I haven't used it myself. One of the bigger challenges on the East Coast and a lot of the areas that I invest is they have something called historic district and heritage districts. When you do historic districts and heritage districts, a lot of the rules are really difficult with what you can use. We've gotten past having to use triple tabs, and so they let us use arcs, but it's still a challenge to get that done because it's just amazing. They went back to a photo that they found in 1982 to say that that's the way the windows needed to look in a house that I just did. Oh, yeah. All right, fair enough. Which is why I bought a B property in South Manchester, not in West or Central Manchester. Yeah, knowing those areas is still key. Dung Tai, yes, I am still learning so many nuances in real estate that's both exciting and nerve-wracking. I'm with you. I've got over 100 units, been doing over 20 years. I still learn. That's why I like working with Zuber, why I like working with Dion, why I like working with Millennial Mike, why I like working with all these guys. That's why I like working with them, is because something that they've experienced that I might not have experienced, I can gain that knowledge and it's invaluable. It makes me better. Let's see. Shirt Lizard. Hey, Shirt Lizard. Good to have you back. Happy New Year. Finishing up my third unit, which is 100-year-old gut to studs. So you know all what we talk about when you talk about that dimensional lumber. I would have been lost without all your knowledge. The best show on YouTube. Well, Shirt Lizard, I thank you so much for saying that. It's that's humbling for me. I love to share this with you guys, my experience, because man, 100-year-old property. So you were probably dealing with horsehair plaster, lathe board, dimensional studs. Man, you were dealing with all of it. You might have found knob and tube in the ceilings when you opened it up. You might be dealing with cloth wire, asbestos. I mean, there's all those things when you get 100 years old. So congratulations on that unit. That's awesome. Yeah, Hyder, great comment. Yeah, way to add to the show, Dung. That's fantastic. Leela Kiros. I was in contract on a rental, number 10. Okay. Supposed to close last Thursday. Okay. Seller backed out. Do I have any recourse? I assume I'll get my, deposit. Does he have to pay the lender for the appraisal? I don't know. I think that's state dependent. I think that I would talk to the attorney real quick, but just a quick question, because that's almost worth what your appraisal is. I would think that it might not be, I would think that you could get it from him in small claims or from them in small claims, like you could sue them for it and then get court costs in a small claims case, but I would talk to an attorney about that. If it were me, if the appraisal were $500 or $600, I would probably make mention of it to them. I would love to know. So tell me why they backed out. That's crazy. Dividend Dave, I want to work with Dung Tai. I know, right? I think Dung Tai is going to be in the course. Come on, Dung Tai, you got to join the course and the boot camp. We got to have you there. Everyone's going to talk about those 66 units and how you did all that burst stuff and how you can still get better. That's the key. I was talking to a real estate investor that's bigger than me. They own more units than I do. And he even said to me, he goes, I'm totally going to take the course. And I was like, really? He goes, yeah. He goes, you do like 4 or 5 things that I don't do. And he goes, I want to skill up. And I was like, well, I might not let you win because he's sort of in my market. Oh, that would be a moral dilemma. Ready on what's necessary to turn a large attic into a bedroom. The windows are pretty small. So egress, fire escape, headroom. Section 8 actually has a calculation for headroom. The conversation is with the city. A lot of times, sometimes it can be, you'll need to put in a knee wall, and then how productive is that space? And then you have to make the window egress. And that means in making that window egress, usually it's just converting it from a double hung to a casement. But you have to make sure that you have your 5.7 cubic feet there in the window. There's a lot to it, but where I would start is I would start with the code enforcement folks. Because if they say absolutely not, then any more time spent is wasted. Matt G, I bought my first rental last year. Congratulations. That's awesome. Plan is to buy 1 a year for the next 10 to 15 years. How many units would a person realistically need to dump the W-2? So that's a great question, Matt G, and it varies market to market. So there's some markets where you can literally have bought 2 properties, let's say they're 4 doors each, where you could effectively quit your W-2. Dion, who's one of my favorite examples, he makes on 16 doors, not 16 buildings, 16 doors, makes about $15,000 a month net. Longevity and time in this market is the biggest key. So usually it's 4 buildings, but if you do, so I have a strategy called the 4-3-2-1 strategy, which is 4-plex, triplex, duplex, single family. You could retire if you're in your 20s. It's all about that time horizon. If you're in your 20s, you can easily retire in 20 years, in all likelihood. And if you're in your 30s, it's probably in your 50s. It's probably a 20-year gap is what I would say. Because then you're looking at 20 years of appreciation, 20 years of rents. It's not so much the appreciation that you're looking for. It's the pay down of the mortgages, pay down of all that stuff. And the fact that you're probably at a really low rate. And even when you go to retire, it doesn't mean that you just own the houses outright and you just take the cash flow. In some cases, you still lever it with debt. And then you have hundreds of thousands of dollars, or in some markets, millions of dollars just from a few buildings. Let's see. I am always open to expanding my network, Dave. Yep, I'm in New York, but I'm investing in upstate New York for rentals at the moment. So Dung Tai, are you in like Albany or that area, or are you further north than that? Flash of light. I'm a workman. I feel your pain in West Virginia. I have relatives there and visit Charleston ever so often. I think it's as uninvestable as Los Angeles area, my home. Yeah. Oh, Los Angeles is brutal. There's people there that make money. I just wouldn't deal. I couldn't sleep at night. Dung Tai, all-nighter. Thanks. I'm just on a journey like everyone here. Every bit I can do to contribute to this community is a great feeling because I've been there in their seat 3 years ago. I love it. Guys, it's our community. This is what we do here. Build each other up, learn from each other's mistakes, get the encouragement. You feel like you're a little bit stuck. Let's see. Dividend Dave, thanks for the super chat. House hacking a tri or quad is my 2023 and getting an A in Matt's course. Dividend Dave, you will be graded harshly. So I expect after all that you've done and all that you've listened to, you're ready, man. You're ready. I'm telling you that house hack, golly, man, again, I only teach what I did, and I did 9 in 13 years. It sucked. I didn't love it. No place was really home. I knew it was a temporary stop. The longer you can delay getting to that single family, the more you create. Look at Dion. He's still not in a single family. And that's a good thing. It means that he has a lot of money every month, too much to spend. Flash of light. Nope, already did that one. Dung Tai, I'm joining the course, bro. dude, I'm thrilled to have you. I'd love to see you I understand if you can't do the boot camp. I'd love to have you in there. I want people filtering in there as best we can. That's why I discounted it the way that I did. I wanted to make sure that we had good groups of folks, but I'm telling you, relationships will be bonded there. 12 hours, or no, excuse me. Yeah, 12 hours. It's 12 weeks. It's 12 hours with me in that boot camp. It's me and all the other folks in the group, and we're limiting it. It's only going to be, I think it's only 20 or 25, because I want to make sure everyone gets the chance to ask questions. But yeah, it's going to be awesome. Not sure why the seller backed out. Think he figured out I got a smashing deal. Yeah, I would be talking to my agent about that and say, hey, when do I get I want my earnest money deposit back, and I want the fees. You know, I want my appraisal back. Let's see. Yes, high five to Dong Tai. Yep. Where's the link to join the course? I'm not technology savvy. All good, Dong Tai. Hyder put it in the chat a little bit further up. There's the look at the syllabus, everything that we're going to cover, and then there's a link in there for it. Corby Carter, why is no one asked to get Dong Tai on the channel? Well, we're going to get there. We're going to get there. I have a lot of folks. So if you guys want to hear for some bigger landlords, I'm happy to get guys on the channel. I have this one guy, in all honesty, I won't tell you what his name is. He's a total jerk, and I want him on the channel. He's such a jerk. But man, he has a model, and I hate his model, but I learned from everybody. And so, yeah, it's kind of crazy, just a little bit. All right, we got 15 minutes left. I still have to finish packing for a flight that's going to take off in 5 hours. Let's see here. Robert Farinelli, can't wait for the course. Lots of sections in the course I suck at. Robert, I'm telling you, you're a good investor. I think that there's areas that are going to help you. I'm glad that you're in the course. Matt G, I'll join the course. I want to start taking this more seriously. I want to quit my W-2 and do this full time in the next several years. Can you help me get there? I'm in the DFW area. Matt G, I think so. I mean, watch the video for the syllabus. If all of those things are things that you can get better at, I can help you. If all of those things you're elite at, I can't help you. Let's see. Thanks for throwing the link again. Appreciate that, Hyder. In West Virginia, we use metal roofs. In Montana, we use asphalt. And in Washington State, we use a little bit of everything. Yep. Cedar, asphalt. Yep. Yeah. So here it's, we do a lot of rubber membrane, because when they did a lot of additions on houses, they made them flat roof. Ugh. Tell you. But what's really cool is, on those rubber membranes, if they're done properly, they can last 30 years, no problem. They're super expensive. They're probably 2 to 3 times the price. And if you look at my Instagram, Lumberjack Landlord, you look at my last post, you look at the roof that they use there, that was something called rolled roofing with shingle to it. It was it's an abomination. It's completely done wrong. And big surprise, it leaks. And so we're going to replace that with rubber membrane. And maybe we haven't decided yet the onset piece to be shingle, but the roofer is going to be on the roof this week. I do like metal. The only thing that I've ever gotten complaints on the metal about is when it's really rainy, it can be really, really loud. And believe it or not, even though you tell tenants, hey, listen, rain. I mean, I had a couple places that were metal roof that they were just like, yeah, it's just too loud when it rains. I can't help you. Let's see. Matt G, I want to join. Can you help me dump the W-2 and get serious about this? I'm in Dallas, Fort Worth area and family in Houston area. I want to be successful. Just need guidance. Matt G, I believe I can. Watch the syllabus video. Guys, it's 22 years of lessons in that. And I had to condense it to less than 10 hours. It's a lot. It's a lot. Millennial Mike, I'm not sure if you're here, buddy, but Millennial Mike did it. Didn't do the course, but actually he's been helping with doing some of the work for the course. He's like, dude, it's like drinking through a fire hose. He's like, it's a lot. And I was like, good. That means that people can watch it 10 times. It's good. So yeah, watch the syllabus and then you can make the decision. Let's see. Binghamton. Okay. Dung Tai. It's really funny. One of my worst life experiences ever was in Binghamton. I'll tell it sometime. I don't want to tell it now. Too many flashbacks, but yeah. Matt G, you're 36. Dude, you got a great start, man. You got a great start. There's no reason why you should be. You are 4 years younger than when Dion started. Dion started when he was 40, had $1,000 in his bank account. And by the time he was 52, he was retired, making $15,000 a month. And he is the laziest real estate investor in the world, which I'm going to give him a run for his money because I believe my processes and the way that we approach things, I believe I can get as lazy as Dion. I know it's heresy. I believe I can get there. House hacking is like the BFG weapon in the FPS game Doom. I don't know the game, but yes, I believe in the comparison. I do know the game sort of. I wasn't a player. It is. House hacking is legit. Like, even if I mean, if it were up to me, in all honesty, we'd still be house hacking. Mrs. Lumberjack didn't like that idea. And I love Mrs. Lumberjack more than anything, so she won. Sometimes I tell her no, not on that one. Let's see. Okay, okay, Johnson City. Okay, so I don't know Johnson. I do know Endicott, and I do know Binghamton. Binghamton had a minor league hockey team, Binghamton Rangers, for a lot of years. The rink is still there, but yeah. That should be the link. If for some reason it doesn't work, the video is just 2 weeks old. Yep. Yeah. Literally the name of the video is, oh shit, I'm a landlord. Now what? Literally, that's the name of the course. Because I was sitting at that closing table and I was like, man, I am screwed. I had nothing ready to be a landlord. Dividend Dave, Dung Tai. I know. I'm amped that Dung Tai is part of the community now. This is awesome. Can we have just a 10-second preview of the Just Don't Gut It section? Yeah, sure. 10-second preview of Just Don't Gut It. There are... So yeah, so I'm trying to think of what the best 10 seconds I can give you is. The best advice that I can give you is, some people go in and they want to do electrical and they say, yeah, we're just going to rip out all the electrical and put it all back in. Some might have already been replaced and run with Romex. I wouldn't rerun that wire. I would inspect it, but I wouldn't run that wire. I would take a look at it. Other people are like, yeah, absolutely, insulation, we're going to totally replace it. Well, I just did a building. You guys will see it. You guys can see it in the live walkthroughs I did with Millennial Mike. If you look at that live walkthrough, you'll still see all the lathe board on the ceiling. It's because if I rip that down, I lose all the insulation that's above it. Well, I can sheetrock, right? It's going to take my, the cost of re-insulating and restrapping the ceiling so it can be sheetrocked is far more than making the electrician move some wire and route some wire through there to then actually put the can lights in, as an example. So as you look at things like that, that's where it really becomes of critical importance, is don't just gut everything. Try and find value. Also, if, like kitchens as an example, if I'm trying to bring my unit that's in a B-class area to an A-class caliber and I want to redo the kitchen with granite countertops, I look at, is that unit going to be way overdone for what rents are in that area? Because I want to give them something nice, but what if just sanding and painting what's there and putting in granite on top of old built cabinets, what if that does the job and it saves me $5,000 or $4,000? It's always in assessing and going through the building, assessing the things that are good, in good condition, and there's no real reason to change other than to say, yeah, we just gutted the entire thing. It's too many guys just going and gut everything. And that's a problem, because a lot of times you are getting rid of value that might be there. That's a minute and a half long one. Let's see here. Let's see. Ironwood Workman. Yeah, thank you. Yeah. Yep. My life is that song, that song of West Virginia. Now I'm here taking care of a very old family farm. Yep. Making sure it does not go into the weeds. Yeah. Oh man, I've had friends in that position. I completely understand it. Gypsy Tree. Hey, happy New Year, Lumber. Any advice on buying mortgage notes? None. Never did it. Never bought mortgage notes. So not, you know me, tap, tap, I'm tapping out. Don't know anything about buying mortgage notes. And I don't know that any of the guys do either. Zuber might. Zuber would be the guy that I would check with buying mortgage notes. Robert Farinelli, great analogy. Yes, on the Doom thing. Yeah. Dung Tai. Okay, it's pre-order done. Dung Tai, good to have you, man. Can we get a 10-second preview? Already did that. Thanks, Matt G. Yep. Yeah, I'm telling you, I'm very expecting that I'm going to give up the W-2 this year. When reaching out to Section 8, how do you introduce yourself? What questions to ask? So I'll give you a little taste of it. The most important thing is that you want to talk to the housing director for Section 8. And then the things to ask are how many vouchers they have expiring. If you get how many vouchers they have expiring, then you say, great, I've got this unit that I'd like to have you do some showings for folks if you have that expiring. If you're trying to fill something quickly, because then they're desperate, they need to get a place, because if they don't fill that voucher, that tenant, they lose their voucher. I just got somebody into a unit where their voucher expired on the 7th of January. How grateful are they? Not grateful enough. They complained that there were a couple of things that weren't cleaned. And I told her that it hadn't been cleaned yet. I said, we're trying to move you in fast. I'm a dope. Yeah, so those are the things I would ask. I would first ask for the housing director. Ask who they, ask where they have vouchers expiring. But the first question out of my mouth would be, so how can I help you? How can I help you? I know that over the last few years, housing's been really tough. It continues to skyrocket in price. And so how can I help you? And listen, honestly, listen and take notes, and then just go down that field of questioning. The other thing that I would look at too is I talked to somebody, I asked them that question, how can I help you? And they said, oh, this has been great. We had a great conversation. And guess what? It was a great conversation, but then they sent me their rates. And I just called them back and I said, I really appreciate you sending me these rates. Excuse me. That said, there's no way that I can actually get to that number. I don't have any units that I can get there. And I said, so I really appreciate you sending this. Let's stay in touch. And if I have anything that comes available that I might be able to do something, I'll certainly reach out. That's been the path. That's been the path for me. But yeah, I've had that conversation and it's worked out pretty well. So when is the boot camp starting? Sorry if it was already asked on the internet, dropping a lot today. No problem at all. So the boot camp, there's announcements. All the announcements are coming next week. All the announcements as far as when the course hits the market, which will be soon. And then when the boot camp starts, that will be very close thereafter. It's more going to be everybody that signed up for the boot camp. Then we're going to kind of take a couple of polls on best times that work and, that sort of thing. Because I'm going to be a little bit flexible with everybody on that. But it is going to be one class. And so it's going to largely be majority rules. But we're going to make sure to try and pick something that works for everybody. Let's see. So great question. Dividend Dave, Matt G, great focus. You'll get there. Yep, I'm trying to escape the rat race too. That's awesome. Lumberjack Landlord, I'm on the desktop now. Easier to chat. Looking forward to getting educated and network with this community. Super excited to have you, Dung Tai. And I love the fact that you're not that far away too. That's awesome. Holy Toledo, my chat moved. Let's see. Matt Bittner, what's that gentrified neighborhood like present day compared to when you first bought it in that neighborhood? It's nicer. It's nicer now. So it's nicer now, and that's why I sold the buildings. I realized it was time to get out. That wasn't a building for me. It's not where I wanted to be. So it's nicer now. Rents are much better now. The building is probably worth 450, I would guess. And I sold it 5 years ago. I sold it for 3.25. Yep. King Cardano. What is the max distance away from your home do you recommend buying an investment rental? King, fantastic question. I don't go further. For me, I don't go further than 20 minutes because I'm self-managing. I want to be able to get to it. If I can't get to it, I want to be able to have somebody, one of the other subs that I know that's local, get to it. So for me, it's about 20 minutes. For the right property, I would increase that, but I wouldn't start building a stake that far away is my take. All-nighter. I specifically put metal roof on my place for the sound of the rain, and miraculously it's raining in San Diego. There you go. Matt G, where's the link? Okay, yep, you posted it below. Awesome. Afro Capitalist. Hey, happy new year, Afro Capitalist. Oscar Tango Romeo. Hello, y'all. Hope y'all had a wonderful new year. From your new subscriber, Malaysia. Super cool to have you. Hope you had a great new year as well. Dung Tai, I'm on the TV. Chat is not easy on this thing. Yeah, no kidding, Ironwood. I watch a lot of Dion's on the TV, and so I have to bring up my phone to actually respond to something when he asks me a question sometimes. Dividend Dave, the BFG obliterates a room full of enemies in one shot. Yes. Downloading to watch as soon as this is over. Cool. Yep. Yeah, I think, and that will give you the answer, Matt. It's like an elephant gun used on a squirrel. Nice. Dung Tai, Binghamton, Endicott, and Johnson City are all within 15 minutes of each other. I got into this area by chance through wholesaling. I love that. Robert Fairley, I plan on house hacking when I get my single family home, a huge 30-acre lot to put 2 houses on one lot, and hopefully with help with property taxes. I know, right? We'll have to do that if you're in New Hampshire. Matt G, take a lot of actions after you learn something. Don't try to learn everything first, then you'll be overwhelmed with knowledge and can't apply it. That's so true. Yeah, take action with what you know, and then as you come into contact with something that you don't, pull data in. I think the challenge is that there is a certain foundational level of knowledge that you have to have in order to really get in the game the right way. Sierra Smith, Happy New Year, Sierra. I'm also adding house hacking into our strategy, decided to convert our master into a studio, making that happen for sure in 2023. That's awesome. That's awesome. The ladybugs were crazy this year in Tennessee. I was in Connecticut for a while in the fall, and they were everywhere there too. Yeah, ladybug, the invasion. People shouldn't be afraid to make mistakes. They will be made. The biggest mistake is to not get started. Dividend Dave perfectly said. Guys, I've made a ton of mistakes. In fact, I think that course is built off of all the mistakes I made in 22 years. But I've since remedied the mistake, created a system and a process around the mistake to make sure that it doesn't occur again. And if it does, the damage will be minimal. That's the key. Afro Capitalist, due to automation, will there ever be a time where distance landlording is okay, even if you've never lived there? Yeah, I definitely think so. I think that, one of the things that I had to do last year, I might as well have been 1,000 miles away, but I wasn't. I might as well have been 1,000 miles away because my daughter was sick. I couldn't go on site. I couldn't meet with my contractors. So my only option was the phone. It was Zoom. And so I created a process by which they could show me what was being done, show me what challenges they were having. We could then talk about it. And so it's a little bit extra work, but I was effectively not in my market for almost a year, and I still bought 10 deals or 7 deals. I forget what the timeline was on those. 7 to 10. But that is a great question. Dividend Dave, will you ever go over section 8 in the course, Matt? Don't remember if it's in the syllabus. It is. Yep. So part of the strategy section, section 8's in there, and I cover everything. It's basically like, it's called naming your contacts. So yeah, a big part of that has been my experience in the last 2 years with Section 8 as I've done it. Also housing authority. So yeah, big part. Yep. Yeah, it's a big part of marketing your units, which I also teach people how to do, because my way gets a ton of people through the door and it allows me to pick based on merit. It's not random. It's picking based on merit. Where in my state, it's still legal to do that. Tim Stark. Hey, Tim, good to have you here. Do you think housing market in states like Florida, Montana, South Dakota, Tennessee, Idaho, etc., will weather better than others? I think I don't know any of those states firsthand. My general belief is that Tennessee, I don't know the answer. Only because I don't really do any of those. The ones that I have any experience in it at all, like Tennessee is really 3 markets, really 3 heavy markets. It's Nashville, it's Memphis, and Chattanooga. And Florida is, 5 markets. So I think you can see one market get pummeled pretty hard, and I think you can see another market do really fine. The person buying in Miami is not buying in Sarasota, as an example. All nighter. Thanks for engaging in the comments too, Dung Tai. Yep. We're here every Sunday. We are indeed. Mike Zuber for a while, took Zuber course. Yep. Now I need the course for more knowledge. I love it. Thank you, Matt. Enjoy the vacation with your family. Thank you, Invest to Wealth. Ironwood, Tim Stark. I hope so. I bought a few houses I bought in Montana before 2008 housing crash in a location that I was thinking would grow. The values are going up now, and it's just a little bit longer. That's great. I'm looking to start my REI 2,000 miles away with help of local network. I love that. Dividend Dave Hyder, is that a place that rhymes with Gary? Wait. Yeah, guys, Alyssa M. If you see her on here, oh, there she is. Alyssa M is a Montana investor. She says Montana is great. Obviously, Montana is huge, so I'm sure it matters just a little bit. Stephen C. Hey, how is your Vegas search going? Stephen C. It is going. I'm not going to catch a fallen knife for me because it's just an added expense. I'm not rushing to buy because it's an added expense. It's not something where I go there a couple times a year, or used to. I went there 3 or 4 times a year. And so I have standing with, I can get amazing rates on hotels. The purpose is for the family thing to happen. And so the search is going well. Haven't bought anything, not gonna buy anything. I'm looking for that super ultra desperate person that has to sell, but that's not on market. That's really behind the scenes. I'm watching all the market stuff to see what's transpiring in the market. My expectation is to do a deal that's off market, getting a call from one of the guys that I've networked with that says, hey, I got this amazing deal. You should do this one. And then that's probably something that we'll move forward on. Sierra, Knoxville. Yes, I'm sorry. Knoxville is another big market in Tennessee. Nothing bubbled quite like Nashville, but I'm sure, but I'm in much smaller Tennessee markets. Yeah, that's exactly right. Thanks for correcting me. That is definitely a 4th market. And in fact, it was actually the one that I was thinking of when I mentioned Chattanooga. I have one of the guys that I work with is actually out of Knoxville. I was like, and then I said it and I was like, that's not right. Thank you, Sierra. I love the thought in investing in Tennessee. Yeah, Tennessee's got some major upside to it. Tim Stark, as long as they keep making Yellowstone episodes and spinoffs, real estate in Montana will be solid. Yeah, I know, right? The good news is I don't think that's going to end anytime soon. So that's really good. All nighter, hit that like button before we wrap up. Dividend Dave, I know, funny guys. Thank you so much for the time. It was a pleasure hanging out with you guys. I hope you have an absolutely fantastic year. I hope that you let us be a part of it. Come hang out with us on Sundays and we will talk the real stuff. For those of you who have jumped into the course, I am so thrilled to have you, honored to have you. You're gonna have a lot of fun. I'm looking forward to doing some special stuff for those of you in the course. The ones that are in the boot camp that want to even next level up, I'm really excited. It's going to be fun, is what I meant to say. I'm really excited. It's going to be awesome fun. hanging out with you guys for literally an hour a week, where it's just 20 people, 25 people, and we're able to have conversation and get each other better. I know that I'm going to learn stuff from you guys. I've been doing this for 22 years, and I know that I still learn something all the time, and just continue to get better. So I appreciate you guys. I'm so excited that you guys came to hang out with me today on New Year's Day. And now I'm going to go get on finishing packing and get on my flight in a few hours with my 3 youngins, with my 5-year-old, my 3-year-old, and my 20-month-old. Oh my goodness. Guys, have a fantastic rest of your day. It's such a pleasure being here with you. And you'll see me throughout the week. Look forward to talking to you guys. Take care.